Have you ever wondered where the concept of banking originated from? Let's take a journey back in time to the cradle of civilization, Mesopotamia, where the earliest evidence of banking was unearthed. This was a time when clay tablets were more than just artifacts. They were the ledgers of the ancient world, meticulously recording deposits and transactions. Now imagine a world where temples were not just places of worship, but also the very first banks. These sacred structures stored more than just religious artifacts. They were the safe houses of wealth, the treasure troves of ancient societies holding everything from grains to gold. Temples were trusted places, revered and respected, making them the ideal guardians of people's valuables. But these temples did more than just safekeeping. As the first banks, they played a pivotal role in facilitating lending operations. Picture a farmer needing seeds for the next harvest, but lacking the necessary resources. He'd approach the temple, the bank, and borrow grains, promising to return more after the harvest. This was the dawn of credit and loans, concepts that are integral to today's financial systems. This ancient banking system was not limited to Mesopotamia. Similar practices were seen in Egypt, Greece, and Rome, where temples continued to play a dual role as religious institutions and financial centers. In China, too, we see traces of banking in the form of letters of credit, used to avoid the risks of carrying bullion over long distances. So, imagine a time when the lines between the spiritual and the financial were blurred, where temples were the epicenters of both faith and finance. A time when clay tablets were the ledgers of transactions, and lending was born out of necessity and trust. That, my friends, was the dawn of banking. So, the roots of banking are much older than you might have thought, tracing back to ancient civilizations. As societies evolved, so did the concept of banking. But how exactly did it transform during the Middle Ages? As we delve into the Middle Ages, the banking landscape takes an interesting turn. During this period, banking practices began to emerge in medieval Europe, spurred by a growing economy and expanding trade routes. One of the key players in this evolution were the Knights Templar, an order of Christian military monks. They developed a system where pilgrims traveling to the Holy Land could deposit their possessions with the Templars in their home country, and then withdraw a similar value at their destination. This system, remarkably similar to modern checking accounts, provided security and convenience to travelers and was a significant innovation in banking. Now let's turn our gaze towards the Italian peninsula, where the prosperous city-states of Venice, Genoa, and Florence were making their own strides in banking. Merchants from these cities developed the bill of exchange, a predecessor to the modern check. This instrument allowed traders to settle accounts without the need for large amounts of cash, thereby mitigating the risk associated with carrying money over long distances. These bills of exchange were then traded, bought, and sold, giving rise to a rudimentary form of what we now know as foreign exchange markets. Additionally, Italian merchants started to offer loans and accept deposits, further expanding the scope of banking. But it didn't stop there. The Italians also pioneered the concept of double-entry bookkeeping, a system that records both credits and debits, and is the backbone of accounting in today's banking world. As we can see, the Middle Ages were a time of significant innovation and development for banking. The practices that emerged during this period, from the safekeeping and transfer of funds by the Knights Templar to the bills of exchange and double-entry bookkeeping by Italian merchants, played a pivotal role in shaping the future of banking. The Middle Ages were indeed a transformative period for banking, setting the foundation for modern banking systems. Fast forward to the 17th century, a significant era for the world of finance. But why is that so? Well, during this period, the world saw the establishment of the first central banks. Now, these weren't your typical banks. They were the cornerstone of financial systems, tasked with the responsibility of stabilizing and controlling economies. Let's start with Sweden. In 1668, Riksbank, the first central bank, was established. This wasn't just a bank, it was a game changer, a revolution that would forever alter the landscape of Swedish finance. The Riksbank was responsible for issuing banknotes, a novel concept at the time, which eventually became the primary form of exchange, replacing coins. Across the sea, England was watching closely and soon followed suit. The Bank of England was founded in 1694 primarily to fund the war effort against France, but it quickly evolved to take on a more significant role. This institution became the model for most modern central banks, with its primary mission being to maintain monetary stability and the integrity of the financial system. The establishment of these central banks was crucial. It marked a shift from private banking practices to a system where banks were regulated and governed by a central authority. This shift provided financial stability, preventing economic crises caused by reckless lending and overspeculation. But it wasn't just about stability. These central banks also played a pivotal role in shaping economic policies. They set interest rates, controlled money supply, and acted as a lender of last resort during financial crises. The central banks essentially became the guardians of their respective economies. Imagine a world without central banks. We'd likely be facing rampant inflation, unstable markets, and economic chaos. So we owe a debt of gratitude to the 17th century for giving birth to these financial stalwarts. The birth of central banks was a revolutionary step, shaping the structure of modern banking as we know it. Now, let's leap into the 20th century. How did banking adapt to the fast-paced changes of this era? As the world stepped into the 20th century, the banking industry found itself on the brink of a technological revolution. The introduction of computers and the internet in the late 20th century marked the beginning of a new era in banking, the digital banking era. Digital banking, as we understand it today, was born out of the need to make banking more efficient, accessible, and convenient for the customer. The first wave of digital banking came in the form of automated teller machines, or ATMs, which made basic banking services available round the clock. With ATMs, customers now had the freedom to withdraw or deposit cash anytime, anywhere. As we moved into the 21st century, the internet became a powerful tool that further transformed the banking landscape. Online banking emerged, allowing customers to manage their accounts, transfer funds, and pay bills right from their personal computers. This shift from traditional brick-and-mortar banking to online banking was a significant milestone. It redefined the banking experience, making it more personal and user-friendly. But the digital banking revolution didn't stop there. The advent of smartphones and mobile apps took banking to a whole new level: mobile banking. With just a few taps on a screen, customers could now check their account balance, make transactions, and even apply for loans. The convenience and accessibility offered by mobile banking have made it a popular choice among customers today. While digital banking brought a plethora of benefits, it also presented its own set of challenges. Security became a major concern, with banks having to constantly upgrade their systems to protect customer data from cyber threats. Despite these challenges, banks have embraced technological advancements, continually innovating to improve their services. In the face of technological advancements, banking has had to adapt, leading to the digital banking era we are familiar with today. The journey from physical banking halls to digital platforms has been a remarkable one, and it's exciting to think about what the future of banking holds. We've journeyed through centuries of banking history, but what are the key takeaways from this evolution? Our journey began with the dawn of banking, a time when temples served as the first banks in ancient civilizations like Mesopotamia, Egypt, and Greece. Back then, banking was as simple as storing grain, precious metals, and other goods. The temples, due to their fortified structures and sacred status, were the safest places to store wealth. As we moved into the Middle Ages, banking began to take a more recognizable form. The Knights Templar established a system of credit for pilgrims traveling to the Holy Land, and this was arguably the first form of banking as we know it today. In Italy, the Medici family transformed their wealth into a banking empire, introducing concepts like double-entry bookkeeping and letters of credit. The birth of modern banking took place in the 17th century, with the establishment of the first central bank, the Riksbank in Sweden, followed by the Bank of England. This period saw the emergence of paper currency and the concept of fractional reserve banking, which allowed banks to lend more money than they physically held. In the 20th and 21st centuries, banking underwent rapid transformation, driven by technological advancements. From the introduction of ATMs in the 1960s to the rise of internet banking in the 1990s, the banking landscape has been continually reshaped by innovation. This brings us to the present day, where digital banking reigns supreme. Today, we can manage our finances with just a few taps on our smartphones, a far cry from the grain storage of ancient times. The history of banking is a fascinating journey, showing us how integral the banking system has been and continues to be in our society. It's a testament to human innovation, adapting to societal changes and technological advancements over the centuries. So as we look towards the future, we must ask ourselves, what's next? With the rise of cryptocurrencies and blockchain technology, the possibilities are seemingly endless. The history of banking is a testament to human innovation, adapting to societal changes and technological advancements over the centuries. Who knows what the future of banking holds?